also have a look at hog markets this week with University of Missouri Extension economist Ron Plain. U.S. pork exports in June were 4.5% higher than a year ago. The world's most populous nation continues to support the foreign market. May and June were China's best 2 months since February and March of 2014. Its imports in June were nearly 144% higher than June 2015 and enough to make it the third largest buyer. With data dating back to 1989, the United States exported its highest amount of pork to China in 2011. 2016 is on pace to come close to that mark. Through the first 6 months of the year, it's met 45% of that total. For U.S. producers, however, July and August have seen a sharp downward trend of prices. That's where we started when we talked with Ron Wednesday morning.
It's been a sharp drop. We're looking at carcass prices around $60 per hundredweight delivered to the slaughter plants. That's down $20 from what we had 7 weeks earlier. So it's been a very steep and continuing slide in prices for 2 months now.
Is this sharper than the normal seasonal pattern?
Yes, it is. If you look at the situation, normally the peak in prices come in June, and that's probably what we had this year. What was unusual this year is that the trade was expecting late summer prices to be higher than June prices. Futures for both July and August were trading above June most of the spring and summer, and that didn't turn out to be right, so it's been a pretty fast sell-off.
How has this downward pressure impacted margins?
Well, we've gone from making good money to probably a little bit underwater right now. Iowa State calculations said $32 per head profit in June. The July numbers are going to be probably a little bit less. But if you look at cost of production right now, we're somewhere probably $62, $64 per 100 pounds of carcass, and the price is around $60. So red ink today, it looks like.
How much pork have producers really been outputting here?
Well, and we're not up a whole lot, 1 to 2% on slaughter, a little bit less than that on total pork production because weights have been down. In fact, last week's Iowa-Minnesota slaughter weights was the lightest since October of 2013, but we've been ticking up. The expectation is up 2.5% in slaughter this fall, and probably have a new record for fourth quarter hog slaughter.
What do you think that means for 2017 as far as what producers are going to be willing to produce?
Well, we've made some money raising hogs the last couple of years, so we're likely to see some expansion, and that's kind of what the slaughter numbers indicate. Also, we got some new slaughter plants coming online, and they're going to need hogs, so I'm looking for hog slaughter next year to be a tad bit higher than what we've got this year.
Let's talk about exports. They were up in June, at least compared to June 2015, and China has been a big player. By how much are they supporting that market?
Yes, we're up like 160% in exports to China in the first half of this year compared to a year ago. So that's more than the total increase. We're net down on everybody else. But China's short on pork. They've been seeing record prices, and they're trying to cover that by importing pork. And I expect we're going to see a lot of U.S. pork continue to move into China for the rest of this year.
Is that a long-term thing that could continue?
Good question, Jeff. Historically, the Chinese government has wanted to be self-sufficient in pork. They haven't been willing to import lots of it when they come up short, but long-term, I expect they're going to push their production back up, and we'll see these shipments dwindle back down next year.
As far as the other countries, why has there been that weakness?
Well, part of it is world supplies, exchange rates. The dollar's been strong, and so other countries have been able to put pork into China a bit cheaper than us. The Chinese hog market's the largest in the world, and they had some oversupply problems and low profits a few years ago, and that's why they are not producing much pork today.
How would you characterize domestic demand?
Domestic demand usually goes with the economy, and thus far this year it's not been doing too well. Economic growth has been about 1% or so in the first half of this year, and domestic demand for meat and pork in particular looks pretty flat compared to a year ago.
So if we talk about overall profitability in 2016, this last month or so, has it taken an ugly turn, or can producers still hang in?
Well, we're down around a break-even situation, but it's going to get worse as we move through the rest of the year. Not decidedly worse. Yes, hog price is going to come down, but we're looking at a record or near record corn harvest, and so feed costs are going to be declining also. So yes, some red ink, but not too bad of a situation, we don't think.
Where do you think we set the floor at?
Gosh, that's a good question, Jeff. We're looking at record hog slaughter. If we have troubles with capacity, we could see some very, very low prices in December. Last fall, we bottomed out at around $50 on a carcass weight basis. The futures market's saying that's probably where we're going to bottom this year. But if hog slaughter comes in above expectations, it could be still lower than that.